Hey everyone, welcome back to Streetwise Economics. I am Isaac, and today we are diving into the whirlwind of markets as of March 10th, 2025. Whether you are an investor or a trader or just someone trying to figure out what's going on with your money or in the financial markets, particularly focusing in the US, I'm going to do a rundown, show you some charts of what's really going on, focusing mostly on the S&P 500 and also other popular stocks like Tesla and NVIDIA. Now, grab a coffee, settle in, and let's get started. But before we get started, I always want to be very transparent and very clear that I'm not a financial advisor. Investing comes with risks. What I'm just doing here is I'm someone who is so fascinated with what's going on in the financial markets, particularly in the US. And some of the things that I share in this are some of the insights and my analysis that I build for my trading and investment strategies. Now, meaning that this video is for educational purposes and also entertainment purposes. The first thing that I will also say is that trading and investing are different things. Now, when I'm looking at my trading portfolio right now, it's been very volatile. So my trading strategies, have been very different right now because I have a position. If you checked the video that I did last time, I bought an ETF that tracks NVIDIA and I'm down and it's tying up a bit of my capital. But the thing is, I have a bit of other capital that I have, and of course, the other accounts that I don't show you guys here. But I've not been trading. Why? Because the market have been very volatile. You wake up, President Trump says something about tariffs or something, then the market drops. So I say this to say, in terms of trading, I'm just basically buying and selling, right? Sometimes if I'm day trading, I'm just getting in and getting out the same day, sometimes in a few minutes. But right now, it's very tricky because of some of the uncertainty issues that I mentioned. Now, investing now, I'm looking at fundamentally strong companies or also investing in the S&P 500 through exchange traded funds. And if I look, for example, SPY, which is a ticker name for that ETF that I like, it is very popular and it has a lot of liquidity. In other words, you can get in and get out. It's one ETF that I like to hold, for the long term. But the most important thing as well is to make sure that in my case, I don't like to invest or trade with the money that I need over the short term, because like you will see, the market has been really, really volatile and dropping at very shocking rate. So what you see on your charts here on the screen is you can see that if I look at these stocks that I track, I'm looking at Meta, Amazon, they have been really, really, really down. But what is very interesting, let me do an analysis for S&P 500 index, which is basically the 500 publicly listed companies in the US. And these companies are companies that, and these companies, they come from different sectors, but for the purpose of this video, I'm just showing you the weekly chart. So this is the weekly chart for the S&P 500. So you can see here the time frame here. We are currently in March, and you can go back as far as I can. But I think for interest's sake, you can see that here. What is really happening is like now we are almost in a correction, right? Because a correction is a 10% drop. So what this means is from the weekly high that we have, if I was to draw this line here, you can see that we are almost at 9%, right? Drop, you can see here, it came down from this level, right? Almost 6,100 uh, above 6,146 points to now you can see here it's almost 8.83. And as it stands, it seems like it's on a downward trend. And what usually happens is when people start to panic, right? They start to sell. And when people start to sell, the market continues to drop. And the tariffs, the issue of uncertainty in the market is the one that is really causing this to an extent. And also the Atlanta Fed that tracks the GDP in real time indicated that now they are forecasting that the GDP is going to drop more. But it's extremely difficult to forecast what happens exactly in the market. And I'm just going to show you a little bit of some technical analysis. This is what we call technical analysis. So when I look at this, the last red candle before an uptrend, right? It's the demand zone. Usually when price comes to this level, it goes up. You will see that I also have another demand zone here. What this means is that this might be potential resistance level to say when it comes here, it might go down, but nobody can really tell with certainty. But these are potential resistance levels. And what I'm doing is for my long-term positions, I'm actually considering adding up some shares. So this is the very thing that I've been stressing on this channel to say it's always a good thing to have some cash, right? So you can see here there is also another demand zone here. So there might be some resistance level here. So I'm just gonna have it like this. So let's say the S&P 500 continues to drop, and if this was to happen, what this means is probably, let me just remove this here. Let me just remove this. So I'm just gonna take this again and just redraw. So a bear market is when the market drops by 20%. So this means in this case, if the S&P 500 index drops to around, just for simplicity, let's say in this case, okay, I'm just gonna take this as an estimate. It's difficult for me to pin it down exactly for that, but you can see here that there is 20. Okay. So this is 20% drop. So it means if the S&P 500, so we have a long way to go. Right now, this is about 8% from the weekly high. And if it drops another drop to this level, that is about 4,860. So if it drops to that level, then we'll have a bear market. And now, why am I showing you this? What this means is that if we have a 20% drop now, this is something that is uncharted. If it continues to drop, let's say 30%, 40%, 50%, so it means if the market drops, in this case, the S&P 500 drops further, and it's very possible. So if it drops to this level, it means we will have almost 30% drop. This is unprecedented. Now, if I look back to history, the S&P 500 usually bounces back, but remember the past is not the best. It's not always, a guarantee for what's going to happen in the future. Now, the S&P 500, usually companies such as Amazon, Meta, they come from different sectors of the US economy, but these are the ones that constitute the S&P 500. But if you were to look at how individual companies have dropped, you can see that if someone got in at Amazon at 239, it means at this point, let's see how far down they will be. And you see here, this is a supply zone, but let me just show you right now we are at, this is at on the weekly chart, it means if someone bought Amazon shares at the top, now it's on bear market. It's now, like it means the portfolio would be 21% down. And if it continues to drop to this level again, that would be something else. Because now at this level, I'm just going to take the wick of this bearish candle here. This is a demand zone, what we call a demand zone. So these are unprecedented times here. So what am I doing and how am I positioning myself in this, right? In this environment? I think, like I have indicated, I'm being very cautious. For my long-term position, I am just buying and holding. Maybe I just buy 2 shares, 3 shares, averaging down, what we call dollar cost averaging. And if you were to look at NVIDIA, right, I don't have a position other than the NVDX that I have in a few accounts. It's a leveraged ETF. That is, in other words, it's leveraged twice. So NVIDIA is also dropping. If I look at the weekly chart, you can see here that we have a demand zone here, right? So, which is from what Professor, I think it's Doratham, is a professor at Stanford University, and he said his intrinsic value for NVIDIA is $87. Now, if it was to drop to this level, I think that would be a great buying opportunity for those with cash, because imagine now if it goes back to the levels where it was, like let's say here it went as high as 140, so 150. So let me take this. I'm just gonna take this level here. So right now it means NVIDIA is down by 30.37%. So if it was to drop further, and what this means, the most important thing is the psychology, right? It is fundamental. So let's say if it was to drop to these levels, that would be 52% drop. In other words, from 150. So it would be a huge opportunity actually to buy this wonderful stock. So this is something that is very, very important. As a long-term investor, if you are patient and you wait for opportunities like this is something that usually doesn't happen. So I'm hoping that if NVIDIA or a lot other stocks, like you can see here, Tesla is down from the top, right? These would be wonderful opportunities, because if you understand the valuation, right, it will tell you that even if you look at the free cash flows, so if I look at this, okay, actually this would be, let me just take this, because the supply zone in this case, I like to take this candle, and I like to leave this in red, so that, so supply zone, these are levels when sellers are in control. So right now it means bears, in other words, those people who are selling, they are in control. So if they are, in this case, if they are pushing the price down to these levels, but you will see that there's a demand zone here, right? Which I see here. And demand zones, just for simplicity, I just want to keep this green. Now, Tesla is a business that delivers electric vehicle, and they are doing AI, robotaxis, and that's something that's exciting. But I'm a little bit worried with the way Elon Musk, who is the CEO, is actually conducting himself. I don't really care much about politics to say whether it's right or left, but the fact that he's at the center of the politics happening in Washington, in the US, a lot of people, what's happening is that some people there, it's having a reputational damage on the brand, and some analysts, they are saying like ours, who is a very popular guy, and he was saying maybe they are putting it at maybe 5% reputational damage. But the thing is, like, once the sales margins start to decline and you have a CEO who seems to be now mostly focusing on the politics, of course there are other individuals, executives and employees, right, who might still deliver. But in terms of the demand, I think Tesla, the brand, is something that really has to be, for me, it's a concern. Now, what I'm seeing here, if it continues to drop, it's most likely going to even come to this level. So what it means is, for someone who got in at the top, right? This is another demand. So if someone got in at 486, oh boy, it means this individual would have been slaughtered. Like, if you look at it here, right now, where it is, it means that person is 5% down. That's why sometimes it's very, very important to understand valuation of these stocks. Uh, Professor Scott Galloway is one of the people that I follow, and one of the things that he mentions is that he believes Tesla might drop down to $150. So I don't know. I'm just watching. I don't have a position on Tesla, but I'm exposed through the ETF that track the S&P 500 that I own. But I just wanted to show you what's going on in the market, that there's blood in the market. There's a lot of things going on here. If you look at even stocks such as Palantir, they have been down big time, right? If you looking at how they have retraced, right? It's something that is, for most people, they are in a situation where when you look at your account, you see there's a red. In other words, even my account as well, there are some positions that I have that are under, under my buying price, below my buying price. So what am I doing? Like I said, I'm adding more shares slowly for my long-term positions. But at the same time, for my trading, I've been very careful now, because this bull market might, this correction, almost now we are on a correction, 10% drop. If this continues, maybe if it gets to 20%, I might then consider to add more shares even more aggressively for some cash that I have in my brokerage account. But for now, I'm just gonna watch and wait. A lot of people, they make money during these moments, because as long as if you buy wonderful companies, for me, I'm just pricing in the 4 years of Trump. Most likely is going to be very volatile. But after 4 years, President Trump will be gone. There might be someone who might be even more predictable, or even the economy might actually have, recovered. But what is important is to make sure that you have an emergency fund, you buy wonderful companies that have strong fundamentals. And on my trading, I'm just trading, buying and selling, buying and selling. If I make $100, $200, $300 profit, that can kind of like help me to have extra income. And that's my strategy. And I hope you found this helpful. The idea was to just share with you what's really going on in the financial markets in the US today, in the US, March 10th. If you have any questions, let me know. And if you want to learn how to trade, or how to invest, or how to value companies, let me know, because I think sometimes people take it for granted. Because if you have the Dow Jones, now almost 1,000 points down, S&P 500 now almost 9%, getting to 10%, which is a correction down. A lot of people, they panic. And sometimes it might even go down, like I said, 20, 30, 40%. But if you get in at that point, then you can make money, because by the time it comes back to 0%, right, to break even where it was, it means if it was down 50%, it means you would have made 50% already. And if it starts to go up, but this was expected because there was a lot of overvaluation in the market. Companies trading at ridiculous forward earnings. And what that means is that they expected that the profits are going to continue increasing. There was not going to be any outside micro headwinds. And now here we have tariffs, thanks to President Trump. This is a wonderful opportunity for those people who had cash, but unfortunately, a lot of people may not even have cash, extra cash to buy. But at the end of the day, a lot of people make money in the stock market, and these are some of the opportunities. You have to understand the valuation of the businesses that you're investing in. I like to look at the CEOs, the balance of the financials for the past 10 years and get in slowly, because it's extremely difficult to get to the bottom, because they are high frequency computers that usually, if you're looking at companies like Goldman Sachs and all these big institutions, so those ones, they usually are buying in aggressively in big numbers. So right now, for those who are trading, some who had put positions, in other words, who are betting that the market is going to go down, that's another strategy, using options. People are making money by the market dropping. But again, I'm kind of like careful when it comes to using options. Again, it's your money. You have to do what you are comfortable with. I hope you found this video interesting. Thank you so much. I will see you on the next video. Bye bye for now.